Hi everyone, welcome back to the part 2 of the Naked Chat series. Alright, this is a continuation of the market structure where we'll be discussing about market structure and how a buy and sell relates to its strengths. Right, it's very, very simple. So these are risk warning. Pause this, take a good look at that before we continue. Alright, ensure you fully understand what you're doing as we move on. So let's get to it, guys. Let's get to the charts. Alright, so what do we have here today? We have the GBP USD on the H4. Alright, on the H4. Once again, in case you're wondering how I have my chart like this, simply go to your properties and then pause this video, copy this as to your MT4. Right, just change your background to white, foreground to black, and so on. Alright, some of you don't like the grid, so you can remove that by Ctrl G. You have that off, Ctrl G, you have that on. I like to have my grids on. Alright, so we have an uptrend here, alright, and we have a downtrend here. Alright, very simple. So you can see downtrend broken off, market structure broke off here, boom, broke off, came back to retest, had a small uptrend, and then continued the downtrend. Right? Market never moves in a straight line, always moves in a zigzag, zigzag, zigzag. Alright, so you can see here, boom, 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 and so forth. Alright, all the way down. Right, and that's what we have there. Okay, so now what we're going to do here is that I'm going to show you how you buy on an uptrend and how you sell on the downtrend. So let's find a good trend here. So let's go to the H1. I think that would be nice. All right, and let's take this for example. This is a nice breaking market structure. All right, also known as BMS. So you can see we have lower highs. These are very tiny lower highs. Anyways, it's on the H1 too. Alright, lower highs all the way down here, and you can see this was the very last lower high. Alright, so market goes down, creeps up a bit, goes down a bit, down, and then a bit here, boom, boom, down, and here. Alright, so we have this was the very last higher lower low, sorry, right, and you can see it's on the same level with this guy. So we have this at the last low. Now what happened here is this. You could see how, sorry, let me get this. You can see how the market the price came and tested it at once again, came back down, and then finally broke off it forever. Not forever, but finally. So once it broke off, normally you will have a retest in some cases, but here we didn't have a retest because of this so impulsive move. So what happens here is this. Once you notice, right, that you can notice that normally you have a chart setting whereby you have a trend setting whereby you have a corrective move, impulsive move, corrective move, impulsive move, corrective move, impulsive move. I think let me show you that here. Let's say for example, let's use this as a rough sheet. Okay, so on the chart setting you have something like this. Like this is a corrective, impulsive, corrective, impulsive, corrective, impulsive. Forgive my drawing, guys. All right, this is a chart setting. All right, this is a trend, sorry, a chart trend. All right, so for the bullish you have something like this, like this, like this, like this. All right, market never moves up in a straight line. All right, never falls in a straight line. All right, so this is what you have on every time on the market, or if it's not going either one of this is going in a consolidation. All right, a consolidation. All right, then finally it breaks up down, or it breaks off up. All right, we always have that. Pardon my drawing and pardon the rough shit, but just so you understand. So this is what we have here. Can you see that it's the same impulsive, and then this is corrective here, this small thing, impulsive again, this is small corrective thing, impulsive, corrective. Then what happened? You can see that the next trend that came up broke off the previous high of the corrective. All right, so what you can simply do is this. Some people do it, all right, but it's not so accurate. They sell they place, okay, this is a demo account, so you can afford to play around on it. All right, so let's use a standard lot for example. All right, And then by the way, if you do not know which kind of lot size you should use according to your account size, check our video on the basic course. Right, we have lot size and position sizing lectures there that would give you tutorials on all of that. So some people simply place a buy stop here. All right, so you can see that this is a buy stop. So once a buy stop is an order that gets triggered when the price reaches it and crosses above it. All right, so you can see we have a buy stop here. If you had a buy stop here when this happened, would have simply gotten in this trade and moved along with the trend. All right, so some people do that. All right, it's not so accurate, like I said once again. All right, but some people do it. So I'm going to cancel this. So I'm trying to close this. All right, so others, what they do is this: you have this break off happen, and then there's going to be a retest. So on that retest, they will enter on the second reversal candle. Let's find that scenario here. Let's try and find a scenario here. All right, let's try and find a scenario. All right, this is one, not so far. All right, you can see we have corrective, impulsive, corrective, impulsive. Then there's a little corrective here, which is the last lower high. See that? Then put this in green so you to be more transparent. All right. Okay, so you can see this was the last lower high. And what happened here, you can see that the chart broke off it and came back to retest. All right, so this retest is my entry point, but not directly like that. Once I have this retest, I'm sure that yes, this was a BMS and it was confirmed. But what happens is I'm going to get in on the second reversal candle. So this was a bearish candle, and that's not a reversal candle there. All right, is a bearish candle in this case. That means it's indicating a downtrend. But you can see we have candlestick patterns we will discuss about later, but I'm talking about the second reversal candle in this case is the second bullish candle that will come, because that is what reverses a downtrend. If I have on a downtrend, if I have a green candle forming, then I know that there's a reversal coming up. So look at this, for example, downtrend. Then this was the first bullish candle that formed after the bearish candle, right? But reversal candles have their own explanations to be given later on. All right, but we have other contents on those in the channel, so do well to check out for them. But this is the first bullish candle, and this is the second bullish candle. So I mean to get in on the second bullish candle, which is here. So this will be my entry point. All right, and my take profit targets would be here. So let's use horizontal lines to justify that. So I can, okay. Then where's my stop loss? My stop loss is just below the BMS. So I'm going to have it here. Okay. So this is what some trade like this. So you have two like 3 pips, that's 30 pips, sorry, for 114 pips. So you can see how there is a large risk to reward ratio, which is very convenient. All right, so risking 30 pips for 100 and over 100 pips is an awesome risk to reward ratio. So you can see how we trade the BMS. All right, so let's just take one last example, and then we round this off. Let me delete all of this. I see none of them, man. I don't want to see anything on the charts. I like it naked, 100%. All right, clean. So let's take this for example. You can see corrective wave, impulsive, corrective move, impulsive move, corrective, impulsive. Then we have the high here. All right, this was the last high. So let's take that for example. Can you see that? So we have this was last high, broken up by price, came back to retest. This was the first bullish candle that formed up. I'm not going to get into the first. I'm waiting for the second bullish candle. There was no bullish candle. This was the only bullish candle that formed after the bearish. All right, and I'm not convenient getting into that. So what do? I just still wait for my entry. So you can see here we have success, another bearish candle, then 2 bullish candles. I can actually get in at this point on this particular candle here. All right, then put a line there so you'd see the candle I'm talking about. So I think it's this one. Nope, this one. All right, but my stop loss will be taken out. Why is that? Because my entry will be here, and then my stop loss will just be below. All right, so you can see that it's not all about the entry and the candle and so forth. So there's an advice I'm going to give you guys, all right, or a hint I would say. When you have your second reversal candle gotten in, all right, your second bullish candle, sorry, in terms of a bearish momentum, and your second bearish candle in terms of a bullish momentum. So in this case, it was a sell trend, so we're looking for bullish candles. All right, so this is the second bullish candle here, the first that we would see. So let's say we are not seeing any of these other charts, so I will actually make a buy order here, put a buy stop here, and then my stop loss would just be 13 pips. All right, my take profit, my first TP will be 90 pips, 80 pips or 87, and then second one will be 208.48. Now that will be my stop loss will be taken out by these other wicks that came up. So what do I do in this case? Your minimum stop loss should be around 30 pips. All right, and your maximum should be 35 pips. Okay, so that's a nice stop loss equivalence that you should have. Your TP will always be great because it's a BMS. It helps you to trail the trend. All right, so that's it for today, guys. Hope you're able to understand how a buy and sell comes in, all right, with a break in market structure. So that's it for this video. Have a nice day.